I think you have to be able to not only speak the language of accounting, but you have to be able to share it with somebody in a way that, from their perspective, they can see how it impacts what they do. I mean, that's real critical.
It appears that the old dull stereotype of the accountant just doesn't wash today. As a team member in a dynamic business environment, the accountant has a demanding, high-profile role that is often a path to the executive ranks in corporate America. Centuries ago, navigators developed a simple but elegant tool for plotting their location on the globe. Today, accountants have an equally simple and elegant tool for getting a fix on a company's financial status. It's called the accounting equation. The equation states that assets equals liabilities plus owner's equity. The numbers you plug into the equation are drawn from transactions. A transaction is an event that affects the financial position of a business and can be reliably measured. For instance, elections and recessions can impact a company's profit, but you can't measure them. On the other hand, buying supplies, selling goods, and reinvesting profits are all measurable functions. To get a better understanding of how this works, we'll take a closer look inside Nostalgic Warehouse, a sole proprietorship. Andrea Rideout started her own business shortly out of high school. The company began as an antique shop, then gradually transformed into a wholesaler of decorative door and cabinet hardware and related items. Andrea did all the accounting herself at first, then realized she needed help to make the business grow. She hired an outside accountant.
At some point, it even became almost a mentoring situation where the accountant would come in and spend long hours helping us to decide the path for the business, which direction we were going to take it, wholesale or retail, helping us to evaluate our profits based on those different paths. And really, at that point in time, the accountant became almost a business partner, even though he was an outside subcontractor.
And we're tracking our number of dealers, which is real.
As the business grew, Andrea found it was more cost-effective to hire a full-time accountant. His key contribution has been to help Andrea develop a strategy to realize her long-range goals.
That really kind of drives everything that we do. We're basically a new startup business, and we have some goals where we want to be, sales projections, where we think we ought to be at the end of this year and at the end of next year and the following year. And we have a path of number of dealers and how much per dealer volume that we have, and so that's really kind of drives everything that we do. We're shooting for those targets, and then we have certain margins in our product that it takes for us to be profitable. I think she's printed lists and given those to the... What is the problem on this one?
In order to help Andrea translate her goals into reality, Jerry had to rely as much on his communication skills as his accounting skills.
Being an accountant, I probably have a little bit more of a conservative outlook on the way the business runs, and Andrea, as the owner and the kind of the originator of the whole concept, is more on the creative side and more of the sales side. And so I have to be able to understand what she wants to do and then translate that into reality and what the dollars are. And I think that may be a hard task, because the two of us have to be able to use our separate skills and yet put those together.
Like many startups, the business was financed internally. But after 10 years of self-funding, Andrea was eager to grow more rapidly.
So we went to a bank and presented them with our profit and loss statements for the several previous years, and of course our income tax reports and all the various reports that showed them that we were growing and making a profit. And actually at that point in time we had a pretty easy time getting the funding that we needed, which was probably in the $50,000 range.
The financing was entered into the ledger as a transaction. Here's how it looks in the accounting equation. The loan increases the company's assets and increases the company's liabilities by the same amount. Among other things, Andrea used her loan to buy inventory to expand her product line. The purchase of inventory is entered as a transaction. In order to ensure that her product line is generating a healthy profit, Andrea relies on various financial accounting data to track revenues and expenses and determine when price increases are possible or necessary and how much they can be increased.
It's amazing to me how much 1% or 2% can bring in additional revenues. You know, if a company's doing, say, $1 million a year, and you raise your pricing 1%, well, that's $10,000 a year that you basically get for doing nothing.
Regardless of the size of the business today, managers have come to rely on accountants for more than financial data. Accountants today are viewed as consultants, even partners, who help chart a company's success. To provide a quick picture of a company's financial status, accounting transactions are distilled into summary reports. There are 4 basic reports: income, equity, balance sheet, and statement of cash flows.
Give me a report on the accounts receivable today. What I need to know in particular is...
Using these tools, Albert Black, President and CEO of OnTarget, was able to make important decisions about the growth of his business.
From the very beginning, I was the most interested in the income statement. What was my revenues and what was my net income? Were we selling enough and were we profitable? So I really focused on the income statement and considered myself an income statement manager. Then as we began to intervene with the capital markets, either from the debt side of the market, working with bankers or similar type lenders, they were always focused on the balance sheet. They wanted to know what we had in the form of assets, what we owed in the form of liabilities, and what was the resulting equity. So they were really sensitive to the balance sheet. Since I've grown and developed over the years, I've become more accustomed to managing the cash flow statement. Accounting reports that we have this morning.
Well, I hope I can help you with them.
All right, taking a look at the balance sheet first.
Whatever size the enterprise, the same basic financial statements provide valuable, decision-making information.
I can think easily of examples where reviews of financial statements have resulted in a policy shift. We are a business that it operates in different market segments. We have a consumer market segment, a wholesale market segment, and a segment that serves business customers. And as we look at our general financial statements for those segments, we'll notice levels of performance that may be indications of bad decisions in terms of servicing specific customers within the segment, may call for price increases within the segment, or basically scaling back in terms of servicing this segment, making sure that we're not going to market with an offering that is not as profitable as we'd like. So those general financial statements can be very helpful for also assessing investment between the segments and looking at the net realized revenues or operating profits of the various segments.
By offering managers a snapshot of a company's performance ranging from income to cash flow, summary reports have become an indispensable tool of business management. In a world that's constantly in flux, accounting remains a source of steady, reliable information. No major decision related to investing or lending money can be made without it. It's the lingua franca of business, because the accounting process remains fundamentally the same regardless of an entity's size or industry. The accountant records measurable events or transactions and applies this raw data to the accounting equation, establishing a company's financial status. Transactions are distilled into summary reports, which become the guideposts for decision-making. But the accountant's role today extends beyond recording transactions and presenting reports. More than ever, accountants are called upon to analyze and interpret information, to exercise imagination, and think dynamically and strategically. Leaving the old stereotype behind, today's new finance professionals are expanding and redefining the role of the accountant in business.